Yeah. All right. I'm live in the group. Okay. So, live currently, hopefully, is making some announcements. Other than that, let's get this party started. 1 second. Let me just check it. Oops. Let's go in here. We got some people on. Perfect. All right. So, hey, what's going on, guys? All right. All right, so I'm Nasar El Arabi, the real estate guru. I'm not a guru, I'm a guru because I actually do this business. Today, I have TRANIKA, all right? Now, one of the things she's going to do is she's going to give us the 7 best write-offs of 2020. However, one of the reasons I wanted to bring her on was, yeah, excuse my tag, y'all. So, brand new, fresh, Kaepernick jersey. One of the reasons I wanted to bring her on was because she is an accountant, right? She's an accountant and she talks our language. Now, some of you who watch me, you probably know from the past that I did have Natalie on, Natalie Kalaji. I still work with her. She's still great. But I wanted to bring on someone else so you guys can have options. And we have TRANIKA. TRANIKA, before we get into like the write-offs, the write-offs and all of that, could you please tell us a little bit about yourself, where you grew up, where you went to undergrad at, and all of that?
Yeah. So, of course, I'm TRANIKA. I'm the founder and CEO of TMW Financial Solutions. I'm based out here in Atlanta, but I do work in all 50 states. I'm from California, the Bay Area, Oakland. I went to OU University, loved it there. I moved around a lot, but Atlanta is my home. I love it. I love it. My business, of course, is TMW Financial Solutions. We specialize in working with real estate investors and wholesalers, just helping lower their tax liability using accounting and tax strategies legally with the tax loopholes. So, I'm sorry, the taxes and tax laws and tax loopholes and all that stuff. So, yeah, I'm glad to be here.
Okay. All right. Perfect. Thank you. All right. So, for those who don't know, OU, what's OU?
Oklahoma University.
All right. Yeah, I told her yesterday I didn't even know it was no black folks in Oklahoma, but she told me and let me know there are some black people in Oklahoma.
Yes, there's black people in Oklahoma.
Shout out to the OU, you know what I mean, and all of that. So, assuming your major was accounting, correct?
Correct.
All right. Okay. Now, you grew up in the Bay.
I did. Bay Area, Oakland.
Shout out to Oakland. Yeah, them boys in Oakland is some wild boys, man. Let me tell you. During the riots, like the last 2 weeks, but they was going in the dealerships, driving.
I've seen that video. It was so crazy. It was so crazy.
Shout out to Oakland. All right. So now you graduate from school, right? Lead me into how you got into accounting.
So basically, with my business, I started more in just like credit restoration, just fixing credit and all that stuff. And then I was like, I worked for corporate America as well, doing bookkeeping and accounting as well while I was opening up my business. So once I started getting more clients in my business as far as in credit restoration and all of that, I left my corporate America job. Then I was thinking to myself one day, I was like, I've been doing accounting and bookkeeping and reading tax law and tax code for the longest. Let me open up my door to business owners because we connect. I have a connection with business owners. And so once I started opening up that door, helping business owners, because it's hard. It's hard for business owners because they really just don't understand the numbers in their business. And so once I started opening up that door, helping business owners, not only getting their books together, lowering their tax liability, all of that, everyone just started coming to me. And so with that, I was like, I need to niche down in real estate. What I used to do as well in real estate, as far as working in corporate America as well, I worked in commercial property too. So I did have my real estate license as well as in California. So I was like, let me niche down helping real estate investors and wholesalers lower their tax liability so they'll be able to save more money, not give so much to Uncle Sam, because lowering the tax liability is the main thing when it comes to real estate investors and wholesalers and all that stuff. So when I niched down to that niche, I didn't realize a lot of real estate investors and wholesalers really, really needed my help. So I was like, let me do it. Here we are. Here I am, 2-3 years later, working hard for real estate investors. Yeah.
All right. And that's one of the reasons I had reached out and asked you to do this interview, because you were niched down to real estate. And when I tell people, I say, hey, look, if you don't get my CPA, or my accountant, that's fine. Get somebody who specializes in real estate.
Yeah, definitely.
Yes,
definitely.
They have to specialize in real estate. They have to understand not only wholesaling, but rental properties and the proper write-offs.
Exactly.
In past years, before I got to my accountant, the accountant I have today, she had to correct
a lot of stuff.
Yeah. So, all right. Yeah, because you're not getting the proper write-offs and everything.
Exactly. Yeah. And it all starts with that too. And like we were saying, like I was telling you yesterday too, you really have to get with somebody who knows real estate, realtors and real estate investors, and know what write-offs they can take. And you want to make sure you can't just get any and everybody to do your books, because if they're not niched down to your company or what you do, it's going to be hard for them. They're not going to know anything. They're going to mess up a lot of your bookkeeping and your accounting, and it's a mess. It's a mess to fix. So
I spent years of getting messed up books. So
yes,
I know firsthand. TRANIKA, somebody asked, "Are you in Charlotte?"
No, I'm not in Charlotte. I am based in Atlanta, Georgia, but I can do taxes and accounting in all 50 states. So my business is legal.
There you go. So my accountant, she's here in Charlotte, but we never see anything. Anything is virtual.
It's virtual. Mostly all businesses are virtual.
You don't have to sit down and put hands on your.
So when it comes to me, of course, everything's virtual. I have a secure client portal. We'll do face-to-face Zoom calls just like this. We'll go over your numbers. We'll go over everything together, just so you see who you're talking to, of course. So yeah, it's all virtual. So I'm here.
Perfect. Okay. All right. So before we move on to the next question, TRANIKA, because we're doing very well on time, do you want to tackle this this one question? How does Donald Trump avoid paying taxes through real estate?
So that's one of the actual 7 ones that I'm going to explain. It's actually the very first one.
We'll save that for later. Okay.
Yes.
I'll save that for later. All right, so cool. All right, so now, before we get into the 7 questions, I still just want to ask you, more questions. So you're based out of Atlanta. You do everything virtual. Now, give me your anticipation of when you take on the client. What do you need from that client? What should that client have?
So if they don't have any of their bookkeeping set up, we definitely want to get them set up in QuickBooks or in some type of accounting software. That's the first thing. They should have, which we'll go over too, a business bank account. We'll go over that as well too, an EIN. They should have all of that. If you don't, it's going to be very, very hard for us to start any of your accounting or the bookkeeping that you're wanting. So if we're doing something fresh, I will literally sit with you guys and go over everything on how we're going to set up your QuickBooks, how we're going to set up your chart of accounts, like all of that information. So we got to make sure. So there's a checklist that I'll send you. It's a very long checklist. It's not very long, but it's super simple, super easy. So whenever I onboard you, there's going to be a checklist that I send you out. But those are probably the main things that I usually talk about first before I onboard a client.
It's kind of crazy, right? Because my first time I got like a real estate accountant. he didn't have an onboarding process. I
Ah,
I didn't have any books. So he was telling when he went to do my taxes,
uh-huh.
he was saying like, I need to see your books. What's that?
Yeah.
You got it from your bookkeeper. Bookkeeper? Wait, what's a bookkeeper? Like, library? You know what I'm saying? Like I go, library, they got books at the library. What you talking about? Your books. And then he had a strong accent, and I barely understood him. And then I go on Upwork. It's Upwork now, but
Mm-hmm, mm-hmm.
like that, hired just any old body, and it was terrible. I gave him my stuff, and he didn't tell me it was terrible. He didn't, like I said, he didn't have an onboard. He just expected me to know.
Oh no, yeah. And most business owners, they don't know. So whenever anybody comes to me, any business owner, real estate, at boutique, anybody, you literally have to teach them. And so because they don't know, and you have to. I don't want to say I have to I have to hold their hand and I have to literally show them what to do. And that's the main thing. Is just it's so important to have your books. If this tax season, a lot of for the PPP and the EIDL loans, like all that stuff, you have to have your books together. So if it's not together, you're going to miss out on a lot of grants, a lot of tax strategy, like all of that. So it all starts with your bookkeeping.
Okay, thank you. Yeah, because like that's one thing. Another thing I like about you have an onboarding process when you bring them. And I learned that years later after experience with the first guy that the successful accountants have an onboarding process. They either gonna bring you up to speed or they're not gonna take you as a client at all.
Absolutely. I was telling you yesterday, I don't take any and everybody. Just like you guys interview me, I'm definitely interviewing you as well, because we have to make sure that we're a good fit together. We both can communicate. If I can't communicate with you, if I can't reach you when I need you, we shouldn't work together. So yes, I do have an onboarding process. It's an Excel sheet. I'll go through it with you whenever we do the onboarding process and get you going. So each day is a different day that we will work together to get you completely onboarded.
Yeah, that sounds good. All right. Yes, and that's a great thing. Now, as far as the individuals coming to you, they don't have any books. What is do you guys have books? Does your company do books, or do you refer them out? How does that work?
No. We'll do everything for you.
Oh, you do
so
everything. Okay.
Yeah, if you're a fresh company, you're ready to go, you're already making profit, and you need me to help you set up your books, get it together, we'll start from scratch. From day one, January 2019 or to December 2020, December 2019, we'll get you together.
Okay, so you'll get them together, and then going forward, you keep that.
Exactly.
Okay. Now, does the fees vary for the bookkeeping?
Yes, fees vary. Fees definitely vary. My website, which we'll go over on the end, it lists everything. So I have 3 separate packages. It's a monthly fee. So basically my lowest monthly fee is $750 a month, and that's for basic bookkeeping package. But it includes a lot. It includes a lot just to help you get going and get you started and us maintaining your books. So
yeah, so with me, I have multiple entities. I have a wholesaling entity, have a flipping entity, have a brand entity. Let's see what else I got. I believe that's all I have, but I have multiple entities that spread things out. So now with your packages, how many entities will you do per package?
So it just depends. Like I said, there's different basic packages. So if you're at that premium gold package, you tell me you have each entity that you probably have 5 different bank accounts that I have to reconciliate. So if you have 5 different bank accounts, which you should for each entity, or if you don't, let me know. There's different packages in that.
Gotcha. Okay. All right. Yeah. because with me, man, the thing was, man, like I started doing a multiple bank account thing after I read a book called Profit First.
Uh-huh.
And so I have an operation account, a tax account, and a
Mhm.
profit. So yeah, so I have that so that when it comes time to pay the IRS, I'm
You're
not
ready to
scrambling,
go.
just write them their check and move on with my life.
Absolutely. Absolutely.
Because it's been years, multiple years before I read that book, multiple years. Uh, me like, okay, well, let me go do a flip so I can pay off Uncle Sam. So
Right. That's how it is.
let me go do a flip. So I do a flip, and make 30, 40, pay them all. You know what I'm saying? But not anymore. You know what I mean?
Right.
So great. Yeah. So all right. Moving along. All right. So your take on the client from novice
Mm-hmm.
all the way up to advanced.
Yep. My largest client that I have, literally, he has properties in DC. He has properties overseas. His assets are large, very, very large, but beautiful properties. So I like to make sure, you really, really have to have somebody that really knows what they're doing, especially if you have a lot of assets that, equal up to $35 million, dollars or so. You got to make sure that everything's right, because Uncle Sam will come chasing down if if it's crazy.
Now, if I wanted to go, like, if I was just, let's say, I was on social media and somebody told me, hey, look, taxes are unconstitutional. You don't have to pay them. Screw Uncle Sam. How do you feel about that?
Yeah, everybody has to pay taxes. I mean, everyone has to pay taxes. Like I said, there's legal loopholes in order to lower your tax liability, and in order for you to defer taxes, defer capital gains, all of that stuff, and how to pay $0 in taxes. You just really, really have to have someone on your side that knows, because there's a lot of tax preparers out there. There's a lot of tax preparers out there. There's a difference between, I always say there's a difference between tax planning and tax tax compliance, basically. So tax compliance, of course, what you're doing is you're giving me all your information. So say if you're an employee, you're just giving me your W-2s, you're just having me enter your information into the system and then shooting them off to the IRS. That's really it. Tax planning is you're legitly fixing up your books from January 1st to December 2020, and we're tax planning, helping you every single month on how we can lower your tax liability, putting together a tax planning packet. So when it comes to the end of the year, to where if you have to pay Uncle Sam or anything like that, you won't be hit with a huge, huge tax bill. So it's so, so important to tax plan as well. So, so important, especially as a business owner.
Absolutely, absolutely. Now with my current accountant, what we do is we do the 4 quarterly calls.
Mm-hmm. Of course.
Yeah. So you basically got everything, right? Make sure, because that way when it comes December, you've been talking with your accountant all year. They know your situation, know where you're at, know what you around about what your tax bill is going to be looking at and everything. It just helps both parties.
Absolutely. I always recommend that as well. It's so best to pay to start quarterly taxes rather than waiting till the end of the year. Quarterly taxes, it's an estimation. Each quarter, I don't know, 10, 5,000, $3,000 a quarter. Then whenever the end of the year, you already know what's going on. So I always recommend paying quarterly taxes and filing quarterly taxes as a business owner.
Yeah, absolutely. Because I definitely do that so I don't get punched
Hit.
in the face. Yeah, there you go.
Because it can come for you.
Man, they came to my house for man. They wanted for quarterly payments.
Yeah.
Quarterly payments for the payroll. Man,
Yeah.
don't mess around, man. They want
No,
that.
yeah, they don't mess around with payroll taxes. We as well do that as well too. So if you need payroll, so say if you have employees, we do payroll we're a one-stop shop. So we do the payroll, we do everything. So
basically, your company is just turnkey, like it's everything. Because
turnkey, yeah, we're turnkey.
all right, well, cool, yeah, because and payroll is extremely important, and
Yeah,
people that reach out to you for your business, people that reach out to you, they'll hopefully they'll ask about this in reference to the payroll services, and because I have payroll services, but it's extremely important that you have the correct forms with the state,
absolutely.
and not only correct forms, they're getting their money on time.
Absolutely.
Yeah, because
You can really, I always train myself. I always, me and my team, we always, the IRS, since we are connected with the IRS, we're very, very close with them. We do a lot of the compliance trainings that they have. And one of the ladies at the IRS was telling us how they are really, really, really cracking down on business owners who are not paying their payroll taxes. They're literally going out to either their brick and mortar or even, knocking on their door or their house, getting them to pay their payroll taxes. They can shut you down. They will shut you down if you're not caught up on your payroll taxes. And that is one thing is so, so important.
Yeah, I didn't know there was a difference between the quarterly payroll tax and federal tax.
Yeah.
I'm telling the IRS lady, like, nah, I send this check. What are you talking about? My accountant is in California. Let me see if I get on the line, because they're on West Coast time, and
right.
So, like, you're not like basically like, I don't care. You like I'm going to explain this to you. I want my money.
Yeah, they want their money.
So I'm like, yo, this is the letter right here. I had 3 more days. So you was gonna wait till the last day. I mean, today, you know what I mean? But it ain't due exactly yet, man. It's a mess. But it's to avoid that, just get a payroll tax company.
Yep.
And so that they got their money in.
Yep.
They got to make sure they had the correct forms, because I'm currently with ADP. But before I got with ADP, for them, the person doing my payroll, they were not submitting the correct forms. And
there's certain forms you have to submit. So
yes.
Definitely get with somebody that that knows what you're doing. I'm sorry.
So it's all right. It's all right. Yeah. So can we avoid paying taxes by using the same amount of money to donate to different charities?
So that's a good question. So when it comes to nonprofits and donating money to nonprofits, what you can do is you can donate money. The best way in donating money is out of your business, or what you can do is if you have your own, say if you set up your own nonprofit, like you, Nasar, if you set up your own nonprofit and you donate money into your nonprofit, let that sit. Let that sit in there. You won't have to pay any taxes on that. So, yeah. It's very, very good. So I always suggest donating to nonprofits. And what I usually do is, as well as whenever we do set up your budgeting, a lot of my clients, they want to do estimations for donating to quarterly to charities as well too. So what I'll do is I'll set up a budget as well for your corporation or for your business, so we can help you donate into the charities, if that makes sense.
Okay, yeah, that makes sense. All right, well, Boss Man in LA, I hope that answered your question. It's a question that was on YouTube. So, all right, great. So, all right, now let's get into these 7 write-offs.
Okay.
For 2020, like what are the best write-offs for real estate investors to do or take?
So the first one, the first question, how does, one of the ways Trump avoids paying taxes because he's in real estate. There's what you call 1031 tax exchange. Have you heard of this?
Absolutely, I've heard of it. I never done anything, done it myself. I've had multiple buyers who had 1031,
Uh-huh.
so they would have to buy a wholesale property for me.
Uh-huh.
So, yeah.
Yeah, so basically that's what it is, the 1031 tax exchange. So if you purchase an investment property and you decide to sell it and you want to set up a 1031 exchange for it, what you'll do is you need to reinvest all that money from that first investment and put it into the first put it into the sale of the second property, either for the same or more, if that makes sense. So for example, if you purchase a property for let's say 100K, something like that, 100K, 150K or so, after you set up the 1031 exchange and you sell the property, you can probably save like 30 to 40% in taxes on that property. So what you're doing is you're avoiding paying capital gains on that, on the sale of that property and taxes. So you can keep doing that over and over and over and over for each property. And so that's one way, that Trump usually does in order to avoid paying, capital gain taxes.
All right, yeah, 1031s can be very powerful.
Mm-hmm.
Very powerful.
Yeah, you have to make sure it's set up correctly. So for that 1031 exchange, you can either use an accountant, your attorney, CPA, anyone who knows real estate tax laws to help you set that up. And then you'll tell your realtor, hey, I'm using the 1031 exchange. So.
Okay, cool. All right, so the 1031 exchange is one way.
Yeah.
So what is number two? Let's get into number two.
I would have to say the Augusta loophole. Have you heard of this? The Augusta loophole?
No.
The Augusta loophole. It's very rare. I have some It's mainly for Airbnb hosts. Basically, what it is usually if you're an Airbnb host, you can really save money from this tip. So IRS basically states if you don't have to report income or pay taxes on that rental property for the first 14 days, not more than 15 days. So for example, right, say you're an Airbnb host, you rented the property from me January 1st through the 14th of 2021. If you made $25K between those days, January 1st through January 14th, that's tax-free, tax deductible. You don't have to report that income. Mainly for Airbnb hosts.
Okay.
Mm-hmm.
So I had 14 days, you're saying, right?
14 days.
All right. So in 14 days, I can just get that money tax-free. I don't have to report that.
If it's 50K, 100K, you do not have to report that.
Okay. All right. I like that. Okay. Now, is that like, wait. Is that an investment property or either your primary?
It has to be, it's investment property. So mostly Airbnb hosts uses that.
Okay.
It can't be for, you're renting out your bedroom and your home or anything like that.
Okay. Okay. All right. That's cool. All right. Now let's get into number three.
I would have to say a lot of people, what they miss is insurance, the insurance for their rental properties. Example, like your premiums for your fire, theft, or flood insurance. A lot of business owners, they do miss that. So your insurance premiums for that.
Okay, yeah, insurance premium. Familiar with that. All right, somebody asked, is it one time or every 14 days? No, it's a one-time thing.
It's a one-time thing. It's not every 14 days.
Okay. All right. Okay, so let's move on. What's the next tip?
I would have to say your QBI deduction, your qualified business income deduction. Have you heard of this one?
No.
Okay.
That's a big word.
That's why they shorten it to QBI deduction. So your QBI deductions, basically you have to be a pass-through entity. So say a pass-through entity, you have to be set up as like an LLC, a sole proprietorship, a partnership, or an S Corp. In order to get 20% off of your business income with the QBI deduction when you're filing your tax returns. So that's one of the new tax laws that came up whenever they changed the tax laws in, I believe, 2017. Yeah, the QBI deduction.
Okay, all right, QBI.
Mm-hmm.
And we are number 4 now, right?
Sure are, yeah.
All right, let's do what's number 4.
Have you ever had a cost segregation study?
I just found out about that at a seminar
Yeah.
earlier. Was it earlier this year, last year? I found out about that.
Yeah, so
Yeah.
I always recommend getting a cost segregation study the first year when you purchase a rental residential home. So basically, residential real estate, it's depreciated 27, let's say 27 and a half years off that residential real estate. So if you purchase a cost segregation study within the first year of purchasing your real estate property, it can probably cost between 10 to 15,000. It can really save money on taxes. So let's say if you bought a home for like 150K, and like I said, real estate is depreciated 27 and a half years. You're probably on January 1st, you would get, I don't know, 5K in depreciation taxes each year on your tax return. So it can really help you save taxes. So definitely get that cost segregation study. It will break it down for you.
I know a guy who uses that, and he was telling me he pays little to no taxes.
Yes, cost segregation studies. Yes. An engineer has to get that for you. So if you contact an engineer, they'll be able to give you that cost segregation study.
Okay, cool. All right, we're moving on. Number 5.
Now we're on number 6.
All right, let's go. Number 6.
I would have to say your management fees. So say if you had management fees from like a real estate company or like a property management company, and they're helping you collect your rent, or they're helping you manage just your full multifamily or residential real estate, all of that, your portfolio, your assets, you can deduct their fees. A lot of people miss that too. A lot of people miss that.
Yeah. Okay. Let's start right there. Number 6, right? And I think a lot of people miss it because I've been in a situation before. All right. Somebody sent me to one of these big accounting firms. All right. One of these big accounting firms that used to work for one of these big name accountants. So that person used to work for one of these big name accountants, where it started his own his big name firm, and so etc. And with the bigger firms, what I don't like is you're just a number.
Yeah.
They don't call you to go over and verify anything.
Yeah.
They just run through your stuff. And that's what happened one year. He just ran through my stuff, and I missed my write-offs. And when I got the new account, I'm like, yeah, they ain't even call me like you call me, or he ain't even talk to me or ask me any questions. He just ran like she was telling like, yeah, he missed out on mad stuff. You know, and they do that. So yeah, man. So make sure you get an accountant that you can have a relationship with.
Yeah,
and
absolutely.
Yeah, you want to have a relationship, and you're not just another number.
Absolutely.
The big firms, I'm not going to say stay away from them. Just want to make sure that they have a relationship with you. And if you're going to get a plan with them, make sure you're getting the quarterly calls.
Gotcha. And with mine, I don't even do quarterly. We do monthly calls. I feel like you need to know what is going on every single month with your accounting, with your books. You need to know what's going on.
All right, yeah, because so basically, when you add a client on, you guys are teammates.
Sure.
All right, that makes sense. Yeah.
Last but not least, is your accounting fees. So fees for any accounting fees that you pay me or pay anyone else, those are actually good write-offs, good deductions as well too. So don't forget to do that. But in order for you guys to take any of these write-offs or any of these deductions, it all starts with your bookkeeping. It all starts with your bookkeeping, because you just can't, you can't have your numbers, just everywhere, because you're gonna miss what write-offs and deductions for you to take. So I see when onboarding clients, and I see a lot of things that's not right, using, like I said, personal bank accounts and chart of accounts is not, like with the chart of accounts basically for your business is like a book, table of contents. So whenever I'm onboarding a new client, your chart of accounts really they're customized to your specific company. So I remember looking at, someone else's books that they had someone else do it, and their chart of accounts was just a basic business, if that makes sense. It wasn't customized. So you really, really have to make sure, especially as real estate investors, you really have to make sure your chart of accounts are good, because there's a lot that goes into real estate investing chart of accounts. So it has to be set up correctly. And then your 1099 miscellaneous is, like I said, if you're hiring any vendors and any contractors, you have to make sure that you're sending those out. All those 1099s to your independent contractors and to the IRS, by the January due date, if they're paid more than $600 off that year. So make sure you guys are doing that. And that's something that we do for our clients as well. So whenever I onboard a client, I make sure that their vendors are set up correctly in their accounting software, rather if it's in QuickBooks or Wave or, HelloFresh, anything like that. You want to make sure that your vendors are set up correctly, because if you don't send those out, then it's going to be hard for them to, file their taxes. So make sure that's correct too. So.
All right. So there you have it. You have 7. All right. You gave 7 tips. So all right. So with your service, right, your bookkeeping services, for your clients, do you get their 1099s out?
Yes. So if they have vendors, yes, we'll do everything. We do everything. We'll send the 1099s out to their contractors, to their independent contractors, everything. So we'll as well send them a copy too, just so they can see.
All right. And to my real estate investors, guys out there currently killing it, making that money, when you're paying your contractors, before you give them a check, make sure you give them the W-9.
Yep.
Do it before the check. Don't do it after the check. They walk into the woods and they never come back out.
Absolutely.
Get those W-9s.
Do not hand over money without those W-9s.
Those W-9s. Get them before the money. So, all right, so W-9s. Now, can you work with all bookkeeping software, or once somebody comes to you, you put them on QuickBooks? And for the people who don't understand, there's multiple bookkeeping softwares out there. Some of them are free, some of them cost, and some of them have a cost associated with them. I pay for mine. I'm on QuickBooks, but I was always told that before you get a bookkeeping software, you check with your accountant to make sure they're okay with that software. So when I'm asking you, what softwares are you okay with? Which ones you're not okay with?
Yeah, so I'm pretty familiar with majority of them. QuickBooks, like I said, Wave, HelloFresh. There's some more out there, something with an S. I totally forgot the name, but you need something that's going to grow with your business. So if you have Wave is free. Wave is free. Your basic, bookkeeping software, all of that. I like QuickBooks. I'm not selling QuickBooks or anything like that, but I like QuickBooks because it grows with your company, and it is so important with your chart of accounts. It's so important with your chart of accounts, because your chart of accounts, if you're a real estate investor, it's big, it's long, it's very, very big. So QuickBooks, it really, really, really grows with your company, especially whenever you're getting more assets in, getting more properties in. You really want to make sure that your bookkeeping and your chart of accounts, all of that is good with your software. So why do we need the W-9? So you can pay your taxes. That's why you need the
W-9. Okay, because what happens is, and TRANIKA, correct me, I'm gonna try to dumb this down for people. So what happens is, when you pay somebody in order for you to get that write-off, you have to report that you paid that person.
Absolutely.
You have to have a track record, right?
Absolutely. Yes.
So that has to get reported to the IRS.
Absolutely.
So you pay me $3,000. I would fill out a W-9. You're going to report that, hey, I paid Nasar $3,000.
Absolutely.
So that's my definition of it. That's how I understand
and
it.
No, it's completely right as well. And then as well as you want to make sure your contractors too, they can file their taxes if it's a Schedule C or, if they're LLC. Usually their 1099s will go to your LLCs and all of that stuff, but they can't file their taxes if they didn't fill out W-9, and they won't be able to report that $3,000 as income. So
correct.
It's a write-off for expenses.
It's a write-off. So yeah, the W, like you have your people fill out the W-9s, whoever. Yeah. So yeah, and it's a write-off for you. So definitely a write-off. Nah, man, I'm not calling you dumb or anything, man.
No one's dumb. No one's dumb.
I just have to want to break it down as simple as possible because for me, people got to break stuff down as simple as possible.
Of course, absolutely.
Again, one of the reasons, TRANIKA, she understands us, and what I mean by us, people who didn't get an A++ in accounting. You know what I'm saying? Like, I don't know if I took the accounting course, but I did, and I didn't do well at it. So yeah. Yeah. So but
yeah, you really, it, especially dealing. I know we have a couple minutes left, but I want to say this. You really want to familiarize yourself with, tax laws and tax code. Take 30, 45 minutes out of your day just reading on taxes, just helping educate yourself, helping gain knowledge, and educating yourself on taxes, especially in real estate taxes, if that makes sense. It can really, really save you a lot of money, just so if you're not going to use an accountant or a bookkeeper or a tax strategist to help you, if you really study and get to know, your industry when it comes to taxes, you can really, really save money when it comes to Uncle Sam. So what is the form where you can live in a property for 2 years to get better rates? What is the form where you can live in a property?
All right. I don't think I think that person or Bam referring to is, how you live in a property for 2 years and you can sell the house, get the tax-free capital gains. I think that's what he's referring to. I'm not sure. Bam, you want to clear that up? What you're referring to? Because I'm actually in the process of selling my primary to move on, and I'm going to cash out of this equity that I have in my property. I've been here for about 6 years now, and I'm getting a bigger place. So the capital gains will be tax free up to $250,000, $500,000 if you're married. So yeah, that's what he's referring to. So he's just referring to it's not a form. I think if you're my accountant, TRANIKA, I would just tell you like, hey, look, I sold my personal residence. However, this has been my primary residence for like the last X years, and you can tell on my tax reform. Is that how it works?
Yeah, that's how it works. It's not a form. Sorry, I was a little confused on that question. Yeah, it's not a form, but yeah, that's how that usually works.
All right.
You know a little bit. You know a little bit of taxes.
Knocking the IRS knocking on my door and beating me up and all that. But anyway, Beauty and Brands, and she can do your taxes. That's a business only. Don't be hopping the DM. Business only, man, because she's donating her time to me. You know what I mean? To do this, and I don't want anybody to. Yo, you single, yo? I'm about to come out. You're not gonna go left on this one.
That's so funny, but yeah, definitely. I'm so glad to hop on here and give you a little bit of you picking my brain, because most of this stuff I only tell my tax planning clients, but
hopefully that you can grow from this. I know my accountant Natalie, a lot of people reached out to us, so hopefully you can have the same success as well. Okay, somebody asked, what is your Instagram?
Oh, my Instagram, it's TRANIKA, or my business Instagram. You can just catch me on tmwfinancialsolutions.com. and then at TMW Financial Solutions. That's my business Instagram.
All right. Yeah, that's a business Instagram. Now, everybody else, put your questions in because we're going to, like, the next 5 or 10 minutes, we're going to do questions. We're going to do some questions. So everybody just get your questions in. All right. So also on the Instagram, I'm sorry, on the YouTube description, I'll get that in so people can contact you. Get your email, the websites and all that. I'll get that in the description.
Absolutely.
Yeah. So, all right. Cool. All right. So, while we wait for some more questions to come in, we went over the seven. The seven go. I'm getting text messages and stuff. People like, yeah, I gotta do number 5. I gotta do number 5. Cool.
I do hope you guys took some notes. I tried to give the juicy stuff as well. That really, really helps, and hopefully you guys took some notes with that.
Hopefully. So as far as when people reach out to you, like they go to your website.
Yes.
And they go, and I guess it's a form there.
Yes. So if you go to the website, there's a menu bar and you can schedule a consultation. Choose what you want, tax preparation, bookkeeping, payroll, any of that. And then if you're looking at I don't put my pricing on my website as far as like the accounting packages, all of that, because I like to speak to you guys and send out proposals and, all of that because it's based on your company, if that makes sense. So yeah, go to the website, check it out. It's made specifically for, like I said, I niche down to real estate investors and wholesalers, and I'm for you guys. That's the number one thing. So I know what I'm talking about. I know what I'm doing. I'm not perfect, but I try. I read a lot of the real estate law, the real estate tax code and tax laws, and try and refresh and get my brain going. So, yeah.
All right. Yeah, it's kind of crazy because, like, I get a question, right? I'm gonna present you with a question, and it's an open-ended question, and I know there's no direct answer because you need numbers in front of you. But people ask me, say, hey, do I have to pay taxes on my assignment fee? And I'm like, yeah, absolutely. So they're like, how much do you have to pay? And I'm like, you got to talk to an accountant. You have to pay.
Yeah. Usually I tell people, of course, set aside 10-15% of that, of those fees, say if you just set aside something between 10, 15, 30%, just so you could pay taxes on that. So
yeah, I think I'll put aside between like 15 to 20.
Yeah.
The bigger deals I do 30%. But yeah, like I don't feel I don't be wanting to tell them what I do.
Yeah.
Because, I do it works for me, but everybody's like in like different tax brackets and all that, and so I don't want to be responsible for telling somebody the wrong thing.
Absolutely, yeah.
All right, this is a good question right here. About my man Chris.
No repairs be written off on rental property. Yeah, so it just depends. So there is Section 179A, Section 179A that states within the tax code saying anything that is ordinary and necessary expense for your company, you can write those off. So yeah, if it's an ordinary and necessary expense for your property or for your real estate investment property, go ahead and take that right off.
All right. Well, cool. All right. So, yeah. You gotta do the write-offs. You gotta do the write-offs.
Yeah.
The rental. Gotta have the rentals. So, yeah, and that. So that was the. Let's see, another question I wanted to address. Oh, man, this is a great question. All right. Let me put this on the screen.
I don't know how this much is managed, but how much should you be bringing in before you reach out for reach out for an accountant in our consultations fee. My consultations are definitely free. And I have, with startup companies, they come to me, of course. I always like to tell them, if you're bringing revenue in, start your books. If you don't have enough money to afford my services, my company, at least start your books on your own. There's a lot of YouTube, there's a lot of, all of that to help you. Once you start getting in enough income coming in, definitely reach out to me for my services, so I can get a quote to help you get an average so you can be able to afford my services. But once you start making $1 in your business, 25 cents, you need to start your books ASAP.
Yeah. I mean, I definitely, you definitely got, as a business owner, you definitely got to have books. Like she said, if you guys are not, if you're not a good fit for her services, which I learned from past experience, and I'm probably one of the cheapest people y'all know, you have to pay for the quality of your books. Mm-hmm. You gotta pay. Like, by getting the wrong people to do your books, you could be potentially screwing yourself from relationships with banks and things, etc., because your books are wrong. And I've been my books were screwed up, so banks wouldn't lend to me. Then when I got my stuff cleaned up, taxes done properly, now I'm bankable. So yes, that's a great question, Mike. But you definitely want to now, doing your own books, it's a job within itself. Yeah. So if for anybody who reach out to her, if you can't afford her services, definitely get them done.
Sorry about that. My computer's going dead, Nasar, but
all right, we're about to wrap this up. All right, before we wrap this up, what we're gonna do is just tell everybody how to reach out to you.
Okay.
And, how to reach out, where to reach out to you, and yeah.
So reach out to me on my, you can go to my website, tmwfinancialsolutions.com. That's tmwfinancialsolutions.com. Follow us on IG, TMW Financial Solutions, and you can email as well, info@TMW Financial Solutions. I respond to emails. We respond to emails within, 24 hours or so. So if you send me an email tonight, you'll be responded within tomorrow.
All right. So, TRANIKA, thank you for, for your time and all that.
Thanks for having me.
Yeah, oh no, you're welcome. And yeah, so that's it. Once again, thank you everybody for joining. If you want to reach out to her to talk more, get your free consultation. She's available for you. It's free, so you're nothing to lose.
Yep.
So, until next time, everybody, I wish you much success in your life and in your business. Peace.
Thank you. Bye.